David Tepper, the founder of Appaloosa Management and one of the most successful hedge fund managers, is known for his bold and insightful investment strategies. Here are 50 notable investment-related quotes from Tepper. 1. The best thing to do is to buy when things are terrible. 2. You've got to be aggressive when things are really bad. If things are really bad, that's when the opportunity is the best. 3. The most important thing is to understand the psychology of the market. 4. You want to be long when things are bad and short when things are good. 5. You make your money when you buy, not when you sell. 6. I don't mind being wrong. I mind being wrong and not learning from it. 7. The market is about fear and greed, and if you can get the psychology right, you can make a lot of money. 8. I think it's really important to look at the situation as it is, not as you wish it to be. 9. In the short run, the market can be irrational, but over time, reality will catch up. 10. In a crisis, it's important to have a diversified portfolio, and that includes cash. 11. I think the most important thing is to have a game plan and to be flexible about adjusting it. 12. The best opportunities arise when others are fearful, and when everyone's running for the hills, that's when you should be buying. 13. You don't make money by being a contrarian, you make money by having the right view at the right time. 14. One of the biggest mistakes people make is thinking they have to be right all the time. 15. You've got to have a plan and stick with it, but be willing to adjust the plan when things aren't working. 16. I think the key to successful investing is the ability to take risks at the right time. 17. If you're not taking any risk, you're not going to make any money. 18. People often think that the worst outcome is losing money, but in reality, it's missing the opportunity to make money. 19. You have to have the courage to buy when things are down, but you also have to have the discipline to sell when things are up. 20. The hardest part of investing is not the analysis, it's the psychology. 21. It's not about being right or wrong, it's about making money. 22. In investing, you should always be thinking about the risk-adjusted return. 23. The best investment opportunities come when everyone is fearful. 24. The most important thing is to stay calm and not let emotions dictate your decisions. 25. I'm not looking for a 100% win rate. I'm looking for a win rate that's high enough to make a lot of money. 26. The best time to buy is when there's maximum fear in the market. 27. You should always be looking for opportunities to take advantage of market dislocations. 28. Sometimes it's better to make a smaller return with less risk than to try to hit a home run with more risk. 29. The secret to making money is knowing when to get out. 30. You don't want to bet everything on one idea, but you do want to concentrate your bets in the areas where you have the most conviction. 31. The market doesn't care about your opinions, but it does care about your actions. 32. In investing, you have to be willing to go against the crowd, but you also have to be able to recognize when you're wrong. 33. Don't be afraid to take profits. It's better to be out of the market than to hold on to something that's not working. 34. The market is driven by fear, and you can make a lot of money by exploiting that fear. 35. If you don't take risks, you won't make money, but if you take the wrong risks, you can lose it all. 36. When the markets are really volatile, that's when the opportunities are the greatest. 37. The most important thing in investing is to think long-term, but to be flexible in the short term. 38. You have to be willing to take losses when you're wrong, but you also have to be willing to double down when you're right. 39. You need to be patient, but you also need to be ready to act when the opportunity presents itself. 40. The best way to make money in the markets is to be a contrarian, but only when it makes sense. 41. Sometimes the best thing you can do is nothing, and wait for the right opportunity to present itself. 42. Risk management is key. If you're not managing risk, you're not investing. 43. The best investors are the ones who can stay calm when others are panicking. 44. You have to be willing to make big moves when the opportunity arises, but you also have to have the discipline to stay out when things aren't right. 45. The market is always unpredictable, but the key is to be prepared for whatever happens. 46. The ability to adapt to changing circumstances is one of the most important traits of a successful investor. 47. The best way to approach investing is to take a long-term view, but also be willing to act decisively in the short term. 48. In the markets, you have to be comfortable with uncertainty and volatility. 49. The most important thing to remember is that the market is never as good or as bad as it seems. 50. At the end of the day, it's all about risk and reward. The key is to balance the two. These quotes reflect Tepper's aggressive but disciplined approach to investing, his focus on risk management, and his belief in the importance of understanding market psychology. His philosophy is to stay flexible, take advantage of opportunities when others are fearful, and to always have a clear game plan while being ready to adjust it when necessary.